Hi all, good evening and welcome. I am Ridul Mishra from the corporate communication team, and on behalf of CareEdge, welcome to you to our today's discussion on enhanced fertilizer subsidy. We sincerely appreciate time in joining us for this webinar. The session will be moderated by Ranjan Sharma, Director at CareEdge. We'll commence the session with a presentation by Hardik Shah, who is the Associate Director at CareEdge. This will be followed by a panel discussion. We'll be having a Q&A session with the audience at the end of the discussion. Participants are requested to please key in the questions in the panel. Now, may I invite Ranjan to introduce the panel members and share the key takeaways from today's webinar. Over to you, Ranjan.
Thanks, Mradul. We welcome our esteemed guest panel members for the day. Let me start with Mr. S. Sakthimani. Mr. Sakthimani is associated with the Fertilizers and Chemicals Travancore Limited, FACT, as a Director of Finance. He has rich experience in strategic planning, finance and accounts, corporate affairs, operations, quality assurance, and auditing. Prior to joining FACT, Mr. Sakthimani was associated as Director of Finance and Marketing in Cement Corporation of India Limited, and he has also served with Steel Authority of India Limited, Rashtriya Ispat Nigam Limited, Scooters India Limited, and Engineering Projects India Limited. Mr. Sakthimani is a qualified cost and management accountant, company secretary, and metallurgical engineer. Our next panel member for today is Mr. Shivakumar Subramaniam. Mr. Shivakumar is associated with Rashtriya Chemicals and Fertilizers Limited as a General Manager Finance. He carries rich experience in treasury, taxation, corporate accounts consolidation, corporate financial strategy, fertilizer policy and subsidy, and ministry coordination. Prior to joining RCF, Mr. Shivakumar was associated with the Arvind Mafatlal Group of Companies. Mr. Shivakumar is a BCom, MBA Finance, and SAP Certified Co-Consultant. My sincere thanks to our guest speakers for joining this session. These shall be the key takeaways from our webinar today. With expectation of normal monsoon and other factors affecting agriculture, we expect promising demand for fertilizer for the current fiscal. However, our dependence on imports is likely to continue in the medium term, looking at the demand-supply situation. There are obvious concerns around the elevated and multi-year high raw material prices, as well as high natural gas prices, which is leading to higher subsidy requirement and is likely to put pressure on the subsidy budget. It could ultimately lead to higher working capital borrowings for the fertilizer companies in case the subsidy budget is not enhanced further. Also, there are some concerns around the availability of fertilizers itself for the Rabi season in case the ongoing war situation between Russia and Ukraine continues for a longer period. Post this presentation, we will have a panel discussion with our esteemed guests and then a question and answer session with the audience. With this, may I now request Hardik to start the presentation. Over to you, Hardik.
Thanks, Ranjan. Before we start the detailed discussion, I'll take you through the key points which we'll be covering in today's discussion. We'll start with the overview of the agriculture sector. Because demand for fertilizer comes from the agriculture sector, so we'll spend some time on understanding about the demand which we expect from the agriculture side. Then we will cover the dependency on imports of various fertilizers like urea, DAP, and other NPK fertilizers. We'll cover the trend in the input cost, multi-year input cost, which will be largely revolving around ammonia, rock phosphate, phosphoric acid, sulfur, and natural gas, obviously, and ultimate impact of this input and gas prices on the fertilizer prices. We'll spend some time on the subsidy budget how has been the subsidy budget for this year, to what extent it will be covering the requirement. Then we'll move to the availability of the urea capacities in India and some discussion around the upcoming capacities. We'll end the discussion with the clear sector monitorables. To understand this slide, we first need to understand LPA, which is a long period average. So LPA will be taking as an average monsoon for the last 50 years, which is 1971 to 2020. So on the right hand side, we can see monsoon in the range of 96 to 104% is considered to be a normal monsoon, whereas in excess of 104 up to 110 is an above normal monsoon. So on the figure on the left hand side, we can see CY 19 and 20, we had above normal monsoon. And then last year it was a normal monsoon, whereas a forecast for this year is again expected to be a normal monsoon. So back to back 4 consecutive years of expected normal or above normal monsoon, it really augurs well for the agriculture and in turn for the fertilizer sector. Water reservoir is a good option to see in case monsoon is delayed. So we can see on a pan-India basis, even region-wise also, the availability of water in the reservoir as of March 22 stood better than last year as well as 10-year average. So again, this factor holds good in terms of good agriculture and good fertilizer demand. MSPs stands for minimum support price, which government announces for procurement of the crops. So in case of Kharif and Rabi crops, normally these are the seasonal trend. So whenever the crops come in the market, because of the demand supply factors, the prices are impacted and it hurts the farmers. So accordingly, to incentivize the farmers, the government has decided to come out with a formula driven MSP, wherein farmers are supposed to be compensated to the extent of 50% of their cost of production. So here we can see for the last 4 consecutive years for both Kharif and Rabi crops, the prices of all the crops has been upward revised. Even in May 2022, government has announced around 5 to 7% increase in all the Kharif crops, again in line with the increased cost of production. All these first 3 factors which were discussed are boiling down to the improving sowing acreage. So barring yearly exceptions, if we see the 5-year average trend for Kharif sowing pattern and Rabi sowing pattern, it has been improving. So again, all these factors are boiling down to the expected improvement in the fertilizer demand. So now after spending some time on the agriculture, we'll be discussing on the fertilizer side. So on the top left side, we have a chart about the all India, all fertilizers production, import and sales. So over last 4 years, one interesting fact we can note here is that there has been significant increase in the imports. In FY20, we had 184 lakh metric ton of imports, whereas it inched up to 225 lakh metric ton in FY22. How this import was there? So if we see the segmental bifurcation of urea, DAP and other NPK, so on the top right side, we can see urea imports have almost doubled from 74 lakh metric ton in FY19 to more than 135 lakh metric ton in FY22. So it's nearly doubling of the import of urea, whereas domestic production has been largely stagnant because the capacity are the constraints and all the capacities are largely operating at a full capacity utilization. Whereas in case of DAP, on the bottom left side, we can see the imports have been range bound. Whereas in case of other NPK, because most of the raw materials are imported, only the final products are manufactured here. So we have a very little import of the final product of the other NPK fertilizers. In terms of raw materials, these are the 4 key raw materials which are consumed for fertilizers. So here we can see on the ammonia pricing trend, multi-year trend from January 18 to April 22. The prices which had been hovering at around $500 1.5 years back has almost gone up to more than 1500 1600 USD per metric ton. So it's a 200% increase in the ammonia prices in the global market. Whereas in case of phosphoric acid, rock phosphate and sulfur, all these 3 raw materials have also more than doubled. So all these raw materials price increases in the global market is putting a lot of pressure on the fertilizer companies and in terms of the fertilizer budget. Natural gas is the feedstock for urea, and here we have tracked the pricing trend of the natural gas, half-yearly prices, which is announced by the Petroleum Planning and Analysis Cell. So here we can see after 2 years of comfortable pricing from April 2022, the prices which the government has announced has been $6.10 per MMBTU, vis-a-vis $2.9 per MMBTU in the last half of the year. So which is a more than 100% increase in the gas prices. Again, here if we see the global international prices of the natural gas, they are hovering at more than $20 per MMBTU. So the basis on which the formula basis on which these prices are determined by the government of India, we feel that for the second half of this financial year, the prices should be more than $8 per MMBTU. So we do not foresee any respite in terms of gas prices for this financial year. It is the next financial year we need to see in FY24 to what extent the gas prices will soften. This rise in the gas prices is essentially because of a lot of factors. Russia is obviously one factor. Beyond that, demand has also been very promising across the industries, and the supply constraints are creating a lot of trouble, and the gas prices are shooting up. So we discussed about the input prices and the gas prices. So both has a lot of bearing on the final product pricing. So here we have put a multi-year fertilizer price trend on the global market. In India, urea is a regulated fertilizer. So per bag cost for the farmers is fixed. So that doesn't give the correct picture about the pricing. So we have captured the global pricing. Here we can see the prices had been in the upswing, but in the last 1 year, from April 21 to April 22, urea prices went up by almost 66%. Also in April, there was a temporary dip in the urea prices. Again, in May, it went up beyond $900 per metric ton. So which is a more than 100% increase in the 1 year time, which is unique. We haven't seen such a sharp increase in the urea prices in 1 year time. Similarly is the case with the DAP, which is the major phosphatic fertilizer. There also we saw almost 66% increase in the prices. So this increase in the prices is again a function of increased raw material and natural gas prices. Nutrient-based subsidy, we largely look at the 4 nutrients: nitrogen, phosphorus, potassium, and sulfur. So government has decided to give a per kg fixed nutrient-based subsidy. And this subsidy budget is given for both the Kharif and Rabi season. Here we can see for the nitrogen, the per kg subsidy component, which was stagnant at around 18 rupees per kg till last year. There the government has significantly enhanced the subsidy in May 2022 to almost 92 rupees. So again, this is a function of direct correlation to the natural gas prices, which has shot up like anything. And there was no increase in the per kg nitrogen subsidy for the last 3-4 years. So government had to give one major shock here. Second, potassium, if we see in between last year, we had a subsidy hike from around 15 rupees to 45 rupees. So the hike in the latest subsidy is not that steep as in case of nitrogen. In case of potassium and sulfur also, the subsidy has been enhanced by 200%, 300%. So all 4 components, the subsidy budget has been significantly enhanced recently. Here we will spend some time, and there are a few clear takeaways from this slide. If we see from FY17 to FY20, we had a subsidy budget, both urea and NPK. Aggregate subsidy budget used to be in the range of 70,000 to 80,000 crore. Then because of this, plus DBT1 was implemented. Because of that also some subsidy backlog had been created, and all the fertilizer companies had a piling subsidy dues from FY18 to 19. In FY21, government, apart from the normal subsidy budget, gave additional more than 60,000 crore subsidy under the Atmanirbhar Bharat package, and cleared off in one shot all the subsidy backlogs. So all the fertilizer companies were the beneficiary of this additional subsidy budget in FY21. Then FY22 again, government ensured adequate subsidy budget so as to ensure that again there are no subsidy backlogs which gets created. that budget was more than 1,57,000 crore. Starting this year in February 22, government announced 1,05,000 crore in the February 22 budget for the fertilizer. And in June 22, they give additional 1,10,000. So the total subsidy budget for this year stands at 2,15,000 crore. Against this, as a care rating, we expect, depending on the raw material prices, elevated raw material prices and natural gas prices, if that doesn't cools off in the second half of the financial year, and if it remains at the level at where they are, then probably will be requiring more than 2,54,000 crore of subsidy. So that there could be a shortfall of around 38,000, 39,000 crore of subsidy requirement vis-a-vis budget. However, for the Rabi season, government may come up with the additional subsidy budget. If that is there, then it should not create any trouble. Otherwise, we could be left with some shortfall here, and some subsidy backlog should start created. Another interesting fact here, which we can see is from FY17 to 20, we had always higher subsidy pertaining to the urea compared to NPK. Whereas this year, because of the multifold increase in the raw material prices, we see NPK subsidy to overtake the urea subsidy. So this is the 1 year when we would have a higher subsidy requirement for NPK compared to urea. For understanding of the sector, we took top 10 companies of the fertilizer sectors, and this top 10 companies comprises of 73% of the urea capacity and around 50% of the NPK capacity. So it's a sizable sample, and we observed their last 5 years financials. So what we can see on the left hand side chart is over FY18 to 20, the overall gearing or the leverage had shot up from 0.74 to 1.04 and 1.08. This was mainly because of the subsidy backlog which was created and which was largely funded by the working capital borrowings. Accordingly, the interest coverage had moderated from a level of 4.51 in FY18 to 3.29 in FY20. The numbers changed dramatically in FY21 with the clearing of the subsidy backlogs. The fertilizer companies rationalized the debt level, which resulted into improved interest coverage. In an FY22 also, because of the adequate subsidy budget, debt level hasn't shoot up, and the full benefit of the lower borrowings helped in the significant improvement in the interest coverage to upwards of 19 times. Slide on the right hand side talks about the short-term debt of these companies as a percentage of the total debt. Because this subsidy overdues were largely funded by the working capital borrowing, which was short-term in nature, the short-term debt as a percentage of total debt had gone up significantly to 80 to 83%. And because of the clearing of those subsidy overdues, now this is at a comfortable range of around 63.5% as of March 22. So clearly, the policy has benefited the sector and the companies in the sector. Initially, we discussed about the import of the urea, which has went up from 75 lakh metric ton to almost 135 lakh metric ton in FY22. And we have a stagnant urea capacity, and the production capacity stands at 233 lakh metric ton. So it is important to see about the upcoming capacities. So these are the three ongoing projects. Out of that, 2 projects of Hindustan Urvarak for around 25 lakh metric ton. This capacity is expected to come on stream this year. So this should help in moderating the imports to that extent. And Talcher facility is expected to take time. It's scheduled to commission in June 25. Accordingly, the imports to the extent of around 25 lakh metric ton in FY24 could be on the lower side. However, import dependency would continue, mainly because of the higher consumption of the fertilizer, especially urea. These are the clear sector monitorables which we would like to look for. In that, as we discussed, gas prices, we do not see any respite for FY23. FY24 would be one critical year, and raw material prices, which has already been at an elevated level. So if this too doesn't cools down, then the subsidy budget, it is putting a lot of pressure. Now, this year, government has ensured enough steps to ensure that adequate raw material and the final product are available for the Kharif season. But if this conflict continues, then availability of fertilizers for the Rabi season, there is a lot of noise around that the availability itself could be an issue because a lot of raw materials come from these geographies. Subsidy budget, again, one hike is already there, but if there is no further subsidy hike for the Rabi season, then again the working capital position of the fertilizer companies could moderate. However, they are at a very comfortable position as of now, so it should not lead them back to years of FY 18 or 19 when they had a lot of pressure on the working capital. And our last monitorable would be implementation of DBT2. So here it is going to be a definite positive for the fertilizer sector and the companies. However, from the government standpoint, we need to see the timelines in which it is implemented and what are the challenges which can come across during the implementation of DBT2, wherein the subsidy would be directly given in the hands of farmers rather than fertilizer companies. With this, I end the presentation and will request Ranjan to take over to start with the panel discussion. Over to you, Ranjan. Thank you.
Thanks a lot, Hardik, for this insightful presentation. Now it's time to seek the opinion from the experts in the sector, our two distinguished guest speakers. Mr. Sakthimani, may I start with you? How do you see the movement in some of the key raw material prices such as potassium, phosphorus and sulfur from the prevailing elevated levels? And what, according to you, could be the factors which could lead to softening of these raw material prices going forward? Would like to hear your views on this, Mr. Sakthimani.
Yeah, first and foremost, thank you, Mr. Shah, for a wonderful presentation. It was giving an overall picture about how the things are going on, and it's actually the persons will be also benefited a lot in this. See, as far as the raw materials prices are concerned, see, you must have seen that urea used to get a maximum cup of the cake, okay, but now the things are slowly changing. Why this is? This is because of the increase in the phosphoric as well as the other key raw materials which are increasing in the north side. That's a basic reason. And actually, this has started before the Ukraine war. Actually, the prices started going northwards before the Ukraine war. The Ukraine war has actually added us onto the food. Okay, it has little bit increased the prices further, and it is making it to stabilize into that level, and it is not permitting it to come down. But we are expecting there is a softening today. But the new normal, it will not be a further increase, but there is an expectation that it may soften. We are seeing the softening as far as the sulfur is concerned. Already it has started coming down. And the phosphoric other things also, we expect in the next quarter, there may be some drop, but we are keeping our finger crossed, basically because of so many factors are dynamically placed today. We are not in a position to predict the future, and we are keeping the finger crossed, but expected further increase will not be there. Okay, this is a maximum increase. We are at peak today. Okay.
Understood. I think Mr. Shivakumar, we would like to hear your views as to, we know the natural gas prices have risen sharply as Hardik covered in his presentation. And as per us, it is expected to remain at an elevated level for the balance part of FY23. How do you see the movement in natural gas prices in FY24? We'd like to hear your views on this.
First of all, thanks to both of you for giving me a chance to share my perspective on the fertilizer industry. The natural gas prices has again substantially gone up, which we believe it's at a maximum at this point of time, and it has got primarily worsened due to these Russia-Ukraine issues. That is number one. And second is the US inflation. Okay. Like we have been reading the reports in US that Henry Hub prices, which were quite benign, hovering between 2.5 MMBTU to 5, that's the maximum band. It has gone today at elevated levels of 8 and 8.9. And US is also tackling its inflation. We have been reading that the gasoline prices at the US pump levels have reached something which was it's a unique high. And this what you call this inflation tackling measures will certainly will bring down these elevated gas level prices, because none of the industries or the business would be able to sustain such high level prices. Okay, either it will be, I'm of the view that either it will be driven by lower demand or it will be driven by a recessionary trend. Nobody wants a recessionary trend, but if this is the worst case scenario, we will be witnessing a lower demand, and that's where the balancing act comes. What I believe is this year, as soon as the war ends, that's what I believe. As soon as the war ends, we will just, the whole things may normalize. And the unfortunate thing is, we all thought it will be a 4-day war. It has become a 4-month war. Okay, and that is what is something as industry people or industry punters, we never expected. Okay, we never expected, and now unfortunately we are in the peak season. Kharif is the peak season for the industry, and we are witnessing a very high price trend. Okay, only thing is the policies are very favorable. Government is supporting. This year we will survive. Next year we are very positively hoping, or we expect that these prices will crash. We had seen a similar trend up to 2014-15, and after that we witnessed an era of about 5 years of very soft gas prices. We expect that this is a one-off situation, and gradually this will stabilize. And primarily, if there is a huge stabilization happening at the Henry Hub, naturally this Russia-Ukraine issues also will get subsumed. This is my take.
Okay. It was a nice perspective, Mr. Shivakumar. Now, Mr. Sakthimani, what according to you could be the factors which could bring down the fertilizer prices to a reasonable level? And mostly we would like to understand as to in what time frame you expect the fertilizer prices to moderate a bit.
Yeah, actually, the Shivakumar has already answered this partly. Basically, the demand level, see, in case you cannot operate on a high level for a quite long time. And the next things, supply constraints as well as the demand constraint also will come into picture. Okay, the supply constraint due to the war and other things is one side, but the demand constraint due to the the high prices, you cannot operate in the high prices for such a long time. That is the one natural phenomena which will reduce that, and that will only soften this. And the Ukraine war and other things, it's highly unpredictable. Okay, which is started with the 6 days or 4 days war, has gone to the 4 months. I really don't know whether it will change the economy of the US dollar and the ruble and other things. We are keeping our things, maybe there is a change, but we are expecting there is a softening, okay, within short time. And this is the key factor. The moment the declaration war end has come into picture, there will be a change in the way the prices are. Otherwise, there is no other point is reducing this. But another thing is inflation. Inflation, Europe as well as the US will bring down the prices, and the food security is again one of the issues. The food prices are going up in that area. Ukraine is the one area where it is a wheat hub. Actually, that is coming down. They are not putting up that much fertilizers. They are not utilizing that much fertilizer. There is excess availability is available. So those are the things which put pressure on the prices and reduce the prices. This is the only effect. Otherwise, these are with a few suppliers, and it is more or less like a cartel. They are going in that way. So it is the dynamism. It is the overall decision making has to bring down the prices. Okay, that's what I feel.
Okay, understood, sir. Understood. Fine. I think now let's come to the main topic or the core topic for this webinar about the subsidy. So wanted to hear from Mr. Shivakumar as to what do you feel about the adequacy of the current subsidy budget of around 2,15,000 crore for FY23, and in your view, could there be a need to further increase the budget for this year going forward?
In fact, before this presentation, I had no inkling of the number, but CAD has done a crystal ball gazing, and you increase from 215,000 to 254,000 crores. Okay, so this itself is a piece of information for everyone. Hey, what is happening is ultimately, like Mr. Sakthimani brought out, see, somewhere price has to be absorbed, and in India, what is happening, we don't want to ultimately the burden either the farmer or we call it the end consumer. See, farmer is only a conduit in the supply chain. Ultimately, we are the people who consume food grains and we incur the cost. Either you stoke a direct front-end inflation and face an issue, or through a fiscal deficit, this is the way it will go through. So ultimately, what is happening, being as government is has taken the challenge, and it has been supporting the issue of food security and the availability of fertilizers. This is what they have delivered through intent. Okay, and we saw last year, like when we saw hardening of fertilizer input prices in the Rabi season, and being critical and to ensure food security, government supported that this thing. Unfortunately, this got continued or dragged on to this year. And the lastly is the crude and the other issues. Nobody expected the domestic natural gas prices to spike up so much, or the RLNG prices to spike up so much. Okay, because we have been tracking the trend right from last 7 to 8 years. It was very subdued. In fact, it had crashed. And COVID was a different year by altogether, wherein it went to an all-time low. But nevertheless, it should have been at a band. And once we expect, if the input prices stabilize, like presently where the pool price of gas is about 1800 rupees per MMBTU, it again comes back to around 900 or 1000 levels, then the whole stability would come. This is what everybody is playing on these dynamics. And like it said, again, a demand supply dynamics. Many, we know in the geopolitical, there are people who are geopolitical space. There are countries which are abundant with gas. It's only the question of settling it through some negotiated deals. If those taps are open, automatically there will be normalcy in the whole process. Okay, and coming from the government perspective, this is a challenge. The only issue is whether the industry will be asked to increase the prices or not. It's a $1 billion question, and it's a $1 billion challenge for everybody. Nobody wants to stoke direct inflation. Like you see, the biggest the day the inflation number goes up, the rate of interest goes up, and that creates a negative it's a negative perception or a negative feeling across the country. And one thing is good, the policy makers are focused on growth. Okay, whatever may be the take, let us focus on growth. And one point of growth is to keep interest rates affordable. The day you increase the interest rates, growth will get stunted. That's the biggest challenge. So keeping in all these fashion, if the prices continue and the government supports the industry and the country at large, this government will certainly absorb this the number what you have projected. And if the things improve, which certainly everybody aspires. See, one is it is driven by demand. Kharif being a peak sowing season, everybody wants to make money from India. But gradually, come September, we may experience some normalcy, which we had seen a couple of years back. This is my submission.
Okay, understood. I think taking this a bit forward, or maybe looking at the current situation, would like to understand from Mr. Sakthimani as to presently how is the timeliness of the payout of the subsidy from the government, and as we speak, how do you see the outstanding subsidy receivables in the sector? What's your sense? Is it piling up, or is it steady? How is it presently?
I like to recall the discussion during the panel discussion of FM during the budget speech. During the budget speech, it was said, the budget estimate was very less compared to the last year deliverables. Then the FM has correctly pointed out, it is a budget estimate. Okay, as per the requirement, it will be provided. And I'm seeing for the company as well as for the sector also, nowadays, thanks to the DPT and the way the digitalization has been done and the way we are getting the amount, and there is no subsidy outstanding till the last year. And the first 2 months, there is some technical issues, okay, in submitting the bills and other things. To the extent we are having that some working capital issue. Let me draw some attention to you. We have also seen the subsidy. The companies are now a little bit getting a pain of working capital issues because of not because of the dispersal itself, because of the subsidy quantum has increased. Let us say out of the 100 rupees, the realization, 55 rupees is coming from through the subsidy. Okay, 55, it varies from person to person, company to company. As far as FACT is concerned, 55%, our factum pass as a prime product, 55% is coming from the subsidy, and directly 45% comes from the dealer or farmers or whatever it is. So we are getting into the working capital cycle a little bit. There is an issue, but we hope that with the technical glitch which is happening in the recent past, it will be cleared, and actually it is started clearing it. So we hope within the next week or next 10 days, we'll be getting some smooth funding, and to that extent, we will be comfortable in running the show. As far as government is concerned, government is also too much supportive. in giving the subsidy, dispersing the subsidy, and there is no point of making the company suffer for want of subsidy in this government. We really thank the government function in this regard, in this forum. Thank you.
Understood, Mr. Sakthimani. Just wanted to understand as to what exactly is the technical glitch which is happening.
The system did not permit to put the DPT things. There were some technical issues in doing the, filing the receipts and filing the DPT claims and other things. The system did not permit because of, the year-end changes. See, from the last year to this year, there is a change of subsidy. Okay, to that extent, they have to also modify the systems. They have to also clear the what is the last year's subsidy and other things. That also they need to modify. To that extent, they were taking some technical things. Okay, on the basis they will also have to understand what is the prices, whether the prices are within the cost or not. There is in the subsidy order also you can see whether we have placed the prices within the reasonability or not. They have to also verify that the government is having the responsibility to understand that, so that at the end of the day, whatever the subsidy the government is providing, it is not only absorbed by that, it is not being passed on to the farmer. The government has a responsibility to look into this. So in view of this, they are doing that background work. On the basis of that work, they are doing the little bit glitch on this. I hope this is already settled and we are in the process of getting it cleared, and hope within the next 7 to 10 days, we'll be start getting some type of movement from the government. This is what our stand is. I leave it to other people to understand what are the positions are.
Okay, understood, Mr. Sakthimani. I think Mr. Shivakumar, as you would have seen, we have seen that the prices of complex fertilizers have also shot up significantly. So considering that urea is subsidized in India, do you expect a sharp increase in the consumption of urea in the near to medium term?
See, my take is, as such, there has been skewed usage of urea. I mean, there is an over usage of urea. This has been the past history, and to ensure to correct that, like the issue was with reference to NPK fertilizers, since we have a pricing freedom and owing to the cost issues, the manufacturers or the traders were increasing the prices. To address these challenges only, government came with these subsidy issues. Probably you are all aware that the critical NPK fertilizer like DAP have been the manufacturers and the traders have been asked to sell at a mandated price, so that this burden is not experienced by the farmer. And what is my take is, if this price has been in vogue right from February onwards, okay, so if this is being maintained and continued, in this there may not be a huge overuse. This is what we believe, that there may not be a huge overuse. There is a demand for DAP, there is a demand for NPK. That demand would get used, and that is the way the natural usage of fertilizers will take place, and there will be a balanced use of nutrients. This is what we expect. This will not create a spiral, because in the past what happened was, we increased the prices of NPK fertilizer and urea remained stagnant. Now this also has become fairly more or less stable. So there will be a perception created, or there is a image created in the minds of the consumer. Yes, this is the peak level. We will not increase it, and with this is the best available level. So this may not lead to any overuse of urea. But if the prices continue to go up and there are challenges, then that tendency would again come back, that we may have to again go. There may be a tendency to use more urea because it's price competitive and very cheap. That's maybe the issue. But otherwise, as with reference to the ground level demand and ensuring the availability of such fertilizers, we expect that this would be maintained and this would get managed.
Okay. I think in the presentation, Hardik covered in detail about the capacity of urea, the increasing imports, and he also covered about the upcoming capacities. So in this backdrop, wanted to understand from Mr. Shivakumar as to what, according to you, are the critical challenges which India is facing in terms of reducing its import dependency on urea, and in what time frame you expect that it could be overcome?
The average shortfall in the demand supply is around 7 to 10 million tons. This is what was analyzed, and this has been witnessed over the last 4 to 5 years. And addressing all these issues, government went in for the setting up of brownfield expansions and greenfield, mainly brownfield and revival of the old units. This is what has happened. Some units have come on stream, they have contributed to domestic capacities and so on. Okay. The good part is agricultural demand or agricultural growth spurs fertilizer consumption. So agricultural is growing at between 3 to 3.5% per annum, and that is also getting translated in fertilizer. So this gap would remain. This is what is my thing, that there would be still a scope. But like you in your presentation you brought out, with a lot of domestic capacities coming in and new domestic capacities already gone on stream, like the Matix and the Ramagundam and all these things available, this would certainly bring some sanity in the market and reduce the input dependency. It is the whole you all know historically urea around in 2016 was around $400, then it crashed to around $220, and it remained in the band of 200 to 300 for about nearly 1.5 to 2 years. It is surprising that the demand growth in agricultural post COVID in 21-22, the urea prices started going up, and the Ukraine war has really led into a huge skyrocketing issue. Like you see, even in February 22, urea prices came down to $590, and again because of the Kharif and all those things, this issue is there. And from the policy making perspective, every authority in the government is monitoring the urea projects completion and all those things, so on. So ultimately, we'll have to get rid of this import dependency, at least in a critical fertilizer, because this will lead to savings in huge foreign exchange and so on. And only thing, considering the scale and the complexity of issues involved in project execution and setting up, the deadlines are getting extended. But what we expect is at least by 24-25, we will be fairly 90 to 95% self-sufficient in urea. That's what's my assumption.
Okay. Fair enough. I think Mr. Sakthimani wanted to understand your perspective amidst this ongoing Russia-Ukraine war, and as also Hardik briefly covered in his presentation. How do you see, or do you see any challenges in adequacy of availability of fertilizers itself in the upcoming Rabi season? What's your take on that?
Basically, as far as FACT is concerned, there is no issue. But as the overall fertilizer market is concerned, yes, there is an issue. Okay, from that area, the supply chains are getting broken. Okay, they are that area only. There are a lot of supplies are coming up for some companies like the other NFL and RCF and other IFCO and other companies. So they are getting a supply constraint from that area. But as far as we are concerned, not much issues as far as that. But yes, there is a pain points due to the war. Once the war is coming to the end, then only we'll be having some type of things. The insurance has gone up very high. The shipping movements have got reduced. The insurancing that those ships are also becoming a major issues. Creating LC and other for those ships also becoming a problem, and payment to the MOP things are becoming a problem. These are the practical issues what the people are facing in getting the raw materials, getting the things from that area. Okay, that is the major issue we are facing.
Okay, fair enough. I think the next question which we'd like to understand is in what time frame we expect the DBT2 to roll out, and what are the potential challenges which could be faced in its implementation? I think this is a question to both the panel members. I'll first request Mr. Sakthimani to give his views on this, and then we'd like to hear out Mr. Shivakumar also on this view.
See, the DBT as of now, the farmer is, let us say, urea, when he is purchasing, he is supposed to disperse only 6,000 rupees per ton. Today, let us say in the gas connection, we used to pay 400 rupees. Okay, the balance, everything comes to the supplier. So you do not have that type of working capital with you. You do not have that type of financing with you. But when you talk about the other way around, okay, let us say the farmer will pay the total things. After that, he will take the money. So the dealers, sub-dealers, retailers, as well as the farmer need to have the working capital to that extent. See, these people are not a regular businessman. Okay, maintaining this much, working capital for them will be very costly. See, today the working capital requirement for that money, let us see a 55%, 100 rupees out of 55 rupees, a company, a FACT, RCF, or these type of big companies are holding it, and we will be getting at a cheaper rate. maybe around 8 to 9% from the financial institutions. But if the same amount a dealer has to pay initially, let us say 45,000 rupees, he has to pay per ton. After that, you will be getting a 23,000 rupees at the time of farmers. Farmer has to pay 45,000, then he will get 23,000. First and foremost, who will pay him? So the working capital for him will be very, very high. He will be taking the microfinancing has to be strengthened. It goes a long way. It's not very easy, and maybe the gas is a very small amount, but this area is a poor farmer already under various conditions. The labor cost is going up. Cost of doing business is going up. In this, even the fertilizer price also, the working capital also goes up. It will be very difficult for him. But this is my own personal prospect. So I leave it to the government to implement this. It is as per the government policy to implement, nothing to do with that. But as of now, we are not foreseeing any day for the DP2 to implementation. But we left to the government. As and when it comes, we will be comfortable because we will be getting as far as company is concerned, personally speaking, we will be getting a benefit. But whatever the realization, we will get on the first day itself. Our working capital cycle will get, strengthened moment we get the DP2. But I think it will be a long way to go, given that the prices increase and other things, the subsidy increase and other things. It's not a right time now. Maybe when the prices comes down, that may be the right time to implement such type of things. We are not in a right time frame to implement this. Again, let me tell you, it is not a company view. It is only a personal view. Okay, it is nothing to do with the official stand of any of us. Okay, it can be challenged. Let me tell you, within the courts. This is only a personal view, and it can be also challenged. Everybody has their opinion to say. Okay.
Fair. So taking this forward, wanted to have the opinion of Mr. Shivakumar on this.
I'd like to echo Mr. Sakthimani's views only. Okay, because it would see, government has one intent that if they want to reduce the subsidy, because it should be highly targeted. That is the objective of the government, that when we subsidize or we support, it should be target driven, and based on all the information available, we have a diversified farm holdings and farm structures. So why you should target, why you should subsidize a very rich farmer, and why only small, and why not support the small farmer? These are all the issues in debate, and this is the discussion which is going on for the past several years. The issue, as we see, that the challenges lie, one is in the implementation, seeing the large population or who is the farmer. That is the biggest question. Okay, you and me also can become a farmer one day, and we can also try to claim, or we'll become eligible for the subsidy. From here, this is where the issue starts. So to regularize the farming, the farmer has been a big challenge. Government has started making steps in that. You all know that Kisan Health Cards have been issued and so on. Then you know about 14, and the issue is it is about 14 crores. Yesterday only I was just reading that through the PM Kisan Yojana, PM released something about 20,900 crores during the past 3 months or something. And the targeted audience is about 6 lakh farmers, 6 crore farmers. You see the sheer size of the beneficiary audience. And this has been a big challenge which government has been thinking. A few years back, some people from the Malaysian delegation had come and they spoke. We have implemented DBT. So I just asked, what is your population? They said it is about 30 lakh farmers. You see 30 lakhs and 15 crores. It's the sheer number which is a big challenge. And government did a pilot scheme, and seeing the success of that scheme, they did not tinker much onto the fertilizer space. And like Mr. Sakthimani said, I will be certainly happy if I get my realization on day one. I'll be the happiest. But let us talk about the risk associated with it. One is the realization is due from XYZ dealer. As a rating agency, you can tell a sovereign debt is a highly rated debt than a dealer rated debt, and you may tell, "Saab, aapka rating need to be relooked." We can't. A 2,400 crore receivable from government and 2,400 crore from market is totally different, sir. And I don't think it will fit in any ratio. Okay, you have to do some provisioning for that. You may have to do an expected credit loss. All these issues, new things will come. But nevertheless, from a perspective, ultimately, from a government perspective, any subsidy scheme or any beneficiary scheme should be targeted. And with the DBT coming in, the DBT phase 1 coming in, a lot of improvements have happened. We all know that the consumption patterns have improved. There has been some savings for the government and so on. Only thing is the sheer size and the scale and all the challenges faced by all the proponents. Like we are also, the industry is a big industry, would be certainly impacted, both plus and minus. All these challenges are there, and there is no regularization of a concept of a dealer. Anybody can become a dealer, anybody can become a farmer. Once these issues are addressed and you are able to bring them through a digital mode, then this can get rolled out. And the intent is very clear, but efforts are being made, and we will not be able to say the time. But once these challenges or these issues are addressed, certainly this would be the issue which will be addressed by the government. And one more issue, what I want to say is, there are two sectors again in fertilizers. The urea is the biggest challenging sector. Presently, you know, there are about 31 odd subsidy rates floating in the market. To homogenize and bring it to a uniform subsidy rate is a big challenge from the government's perspective, because if you do something, somebody may shut shop, and we don't want to happen also, because shutting shop also is not it's not a good thing, and an urea plant is about 8,000 crores to set up. So seeing all these things, government will be doing a balancing act, and we will be reaching towards the target. That's what is my take.
Oh, okay, understood. I'm sure the audience has been patiently waiting with some questions. Now we can have some Q&A session, and may I request Hardik to coordinate with the questions from the audience, if you would have received some questions from the audience.
Yeah, there are a lot of questions, some of it is already answered by the members. So one question is there from Mr. Sandeep Shah about how far do you see the sufficiency of the nutrient-based subsidy rates, which has been recently announced for all 4 nutrients: nitrogen, phosphorus, potassium, and sulfur. So how do you see whether these are going to be sufficient or will it require further increase for the Rabi season?
I think I'll request Mr. Sakthimani to take this question.
This is sufficient. Actually, government cannot subsidize 10%. Its industry also has to take some pain whenever there is an increase. So I think it's okay. It's manageable. It's manageable as far as the industry is concerned. We also have some type of for those people who are taking ammonia totally from spot prices, and for them there will be a little bit extra challenge. Those people who are having some type of manufacturing base, there will not be much challenge. Okay, but for those only mixing people who are importing everything, there will be some challenges. But overall, this is manageable. That's what I can say. And more than that, this is in expected lines. More than that, you see, as you know, Mr. Shivakumar has rightly said, today you are giving a subsidy. At the end of the day, inflation comes from, you are only having a lagging effect. If you give a more subsidy, you are having a lagging effect. That's all. Tomorrow the prices will increase in the other way around. Okay. So we also need to understand how the government is responding. Okay. We should not be in a different path to say we cannot become a very different to talk about what they have given is not right and other things. But timely dispersal of subsidy is more important, which this government is already doing it. That is more important than the subsidy itself.
Correct, sir. Point taken. I think Hardik, next question.
Right. So we have one question from Mr. Sujoy Ghosh. He is asking, we are discussing on DBT2. So he said we have already implemented subsidy on the gas side, LPG cylinders. Government is really cracking down on the misuse of urea. We are hearing a lot of things about a lot of raids on the misuse of urea. And given the fact that groundwork is already done in terms of bringing them through the banking channel. So we were expecting last year DBT2 to be rolled out, but now, as you correctly said, because this is not the right time at these prices. So probably if the price is correct, so all these steps in which the government is moving, so can we really expect DBT2 to be rolled out once the prices improved? I will not insist you much on this because we already discussed, but this is a question.
I think Mr. Shivakumar can take this question.
Yeah, like we have been telling, the timing is not right at this point of time. And like when what we see from the policy actions, government has been working towards this, because it's not that the government has not made any effort on this. And like I said, that when we talk about subsidy, it should be more targeted. Now, presently, you and me are also getting subsidy, technically speaking, because you get a subsidized fertilizer, and that is what Modi, this government targeted. That when it was LPG, let us target those guys who are not having money in their pockets and give them LPG. And those people who have a higher income threshold, certainly they can afford to either give it up, or they should not be eligible for that. This is the philosophy. And over the years, India has progressed, and we should the government money is, the government is accountable for every penny spent, and this is where the vision is, that let us target it. And one of the solution is ultimately is DBT2. Ultimately, there will not be any criticism that ये माल सबको free में मिल गया या सस्ते में मिल गया, misuse हो गया. All these jingoism will stop, and when that visibility will be seen. Ultimately, only thing, it will take time. The problem is we also expect results to happen overnight, but it will not happen overnight. It needs some sustainability and some data to prove that this has happened. And but believe that this will happen, because these are the facts on ground.
Fair enough. Fair enough. Now, for paucity of time, I think this was the last question which we have taken. Thank you once again to all our guest speakers for their insightful views. It was a privilege to host you, Mr. Shivakumar and Mr. Sakthimani. I will now hand over to Mradul to give his concluding remarks.
Yeah, thank you, Ranjan, and thank you again to our guest speakers. And thank you to all the participants for taking the time out and being a part of this CareEdge webinar. For any further queries, feedback, or suggestions, you are please welcome to write it in the feedback mail, which will be coming no sooner the webinar ends. Goodbye for now, and thank you.
Thank you.
Thank you.
Thank you.
Thank you.